If you're wondering how to track your net worth in Excel, stay tuned because in this video I'll show you how. Hey there, Phil McKellar here with mymoneymoves.ca. Today I'm going to walk you through how to track your net worth using Excel. Before we begin, please subscribe and check out mymoneymoves.ca. There you'll find a ton of content and blog posts on all things personal finance. And without further ado, let's get going. Here we are on the mymoneymoves.ca homepage. On this page you can read about the website. There's also a number of links here on the side. These links will send you to blog posts about different financial topics. The one that has inspired today's video is Net Worth 101. And if you don't know what net worth is, you're not sure why it's important, check that blog post out and it will bring you up to speed. Today we're going to assume you've read that or you know all about net worth already. So we're just going to click here on free financial resources and scroll down to this downloadable Excel sheet. So we're just going to click on this and open it. The Excel sheet has opened for us, and the first thing you're going to want to do is enable editing. To calculate net worth, you take what you own or your assets and you subtract what you owe or your liabilities. As you can see here on the sheet, assets are broken into two types: current assets and long-term assets. Current assets are funds that you are likely to use up over the next year, and long-term assets are assets you're not likely to use over the next year. If we scroll down, the same is true of liabilities. Current liabilities are things that you owe and have to pay up for over the next year, and long-term liabilities are debts and other items that you're likely going to be paying long into the future. And the leftover is net worth. So we're going to build this out so you can see how it works. First thing to do is enter a date. We're going to say it's the start of the year, January 1st, and we're going to start with cash on hand. Cash on hand is the most liquid asset we have, and we're going to say that's $500. Could be anything. It could be cash you have in the car, at home, or in your wallet. The second most liquid thing you have is your bank account. We're going to say we have two accounts, one with TD and one with BMO. This one's worth $1,500 and this one's worth $1,000. I like having an emergency fund. I've written a blog post on that topic, and I'm going to say that my emergency fund is at Tangerine and it's worth 10 grand. Whoops, one more zero. And that I have a GIC there too, just for a little extra security. We're going to say that's just $500. Now, there are other current assets that you could have. Could be cash back on your credit cards, gift cards, air miles, reward points with your favorite retailer. It could be anything. For some people, it's not worth much. For other people, it could be thousands. So in this case, we'll just put $100. And that rounds out our current assets. So this is all the stuff we intend to use over the next year. The biggest asset you probably have, or most people have, is a house. So here we're going to type in our house value. We're going to estimate it. Depending on where you live, you can get good estimates of how much your house is worth. In BC, the website BC Assessment is a good tool for that. I can link it below. We're going to say we don't have a secondary property and that we do have a car worth 20 grand. Second-hand car, we'll say worth 20 grand. And now we're going to fill out this information too. For sake of argument, we're going to say we have a 3-year GIC with BMO worth $1,000, and that we have tax-free savings accounts and retirement accounts at TD. I'm just using TD for an example. This is in no way an endorsement. So we have 30 grand there and 100 grand here. And we'll also say that at my work we have a company pension, and that company pension is worth 50 grand. Some people also own small businesses. we're going to leave this blank for now. We're going to say we don't have a small business. And we're going to say that we have some cash surrender value associated with a universal life insurance policy. There are a variety of life insurance policy types. There's term insurance and universal life insurance. A universal life insurance can have some cash surrender value, which means that if instead of continuing to pay for the life insurance, you just wanted to cash it out, they'd give you something. So we'll just say that that's worth $2,000. And then finally, we'll say that we have some nice jewelry and collectibles sitting around the house. So that gives us our total assets, which looks great. But we need to now deduct or subtract all the expenses and debts and liabilities we have. So we'll say that we have a credit card with TD and another one with BMO, and that we have a line of credit with BMO as well. And that these amounts are worth $1,500 and $500 and another 1,000. We'll also say that each month we pay $2,000 in mortgage times 12. So over the next year we'll be paying $24,000. And then for our car, we'll say that we're doing 200 times 12. So we have car payments over the next year of $2,400. We'll also say that we expect some taxes over and above what we are paying each paycheck that we receive from work. So we'll just say we have $300 coming off there. If you have student loans, you can enter them here as well. And this equals our total current liabilities. Now that the current liabilities are in, we need to go on the long-term liabilities and add those. For a reminder, the long-term liabilities are the debts that you are likely to be paying far into the future. So in the case of the mortgage, we'll say that the mortgage is with TD, and that mortgage is worth $200,000, and that we have car payments with BMO, and those are worth $4,800. You can also estimate your future tax liability. Some people approaching retirement like to do this, because if we scroll up here, the pension and the retirement account you have, you won't get that full amount. You'll be taxed on some of it. So you can estimate what your tax rate will be in retirement and then add an estimate down here. So for our argument, we'll just add 30 grand here, and we'll say that's how much tax we anticipate paying on this. And this gives you your net worth. So now we're pretty much done. Some people have a few other things though that they may want to just record and be aware of. So let's say we have some life insurance, and we have this life insurance through Manulife. I'm going to record the value of this life insurance as $100,000. And I'm not going to include it here because up here, I mean in the assets, because I can't really liquidate it or use it. The only value it has is if I pass away. So putting it up here, to me anyway, doesn't make sense, but it is important to record the fact it exists. So I'll put it down here. You could do the same for disability insurance or critical illness insurance, but we'll just leave those blank for now. And then some other people have options or grants, which they get at work. And those options or grants could be great. They could be worth a fortune one day, or they could be worth nothing. For, I guess, conservatism's sake, I've never included them in the assets, and I've just put them down here. And we'll just say that there's the potential that the options at either my work or my wife's work are 100 grand. And that is our net worth. Straightforward, easy, simple. And now you might be wondering, how often should you update your net worth? I personally track my net worth twice a year. I have family members who do it once a quarter and others who do it only once a year. Whatever you decide, The important part is to do it consistently and try to do it at the same time every year. So we'll just say that I'm going to do it halfway through the year here. And I'll just fill this out quickly for us. So I've gone ahead and I've filled it out as though we're 6 months into the future now, January 1st. And you can see that the current assets have changed and adjusted slightly. Some of them have grown a little bit, some of them have declined, and same with your long-term assets. Long-term assets, if they're invested, like your pension or your retirement account, they can go up and down depending on what bond and stock markets do, or depending on how your investments do wherever they're invested. Down on the current liabilities have gone up a little bit. The long-term debts and liabilities have gone down a little bit because the mortgage is being paid off and because the car payments are being paid off. One thing I should mention here with tax liabilities, here we have $300 and $500. If your employer has paid more in tax than your actual tax rate, it's possible this is a negative number for you, and at the end of the year you'll actually get a tax refund. So you can indicate that there as well if you think that's the situation you're in. And that is your net worth over time. And you can do this as long as you like. If you take this Excel sheet out, you can see that you can continue to update this for a very long time. And over that time, you can get a sense of how your net worth changes, how your debts either grow or shrink, and how your assets are performing. So it's a very useful tool. Final points I should make before closing this out. The first is if you don't live in North America where the currency is dollars, you can easily change that. You can take as much of this as you like, you can highlight it like so, and then you can change it. And if you live in the UK, you can change it to pound sterling. If you live in Europe, you can change it to euros. You can do whatever you like and make it applicable to your personal situation. One final thing I should mention is that if you're a new grad or you've recently completed your university or trade school education, you could come out of school with a considerable amount of debt, way more debt than you have in assets. So here we'll just pretend that you have $500 sitting in your bank account. Maybe you have $1,500 or $500 in other accounts, but that's basically it. And if that's your situation, you may also have down here a lot of student loans due in the next year and big student loans due over the next few years. So we could say that you have 30 grand in student loans, and that will give you a big negative net worth number. And if that's your situation, it's not something to panic about necessarily, especially if you're entering the workforce. Your earnings power has improved because of the skills you've acquired during your degree. So if you're new to net worth, if you're just starting out and you see a big red number like this or a big negative number, I wouldn't panic, and I would work very hard to pay down that debt, as many grads do, and slowly turning that negative number into a positive value. And if that's you, I wish you the best of luck. And that's pretty much it. So you now know Net Worth 101, and you now know how to track your net worth using Excel. I found it to be a very useful and powerful tool. It gives me a snapshot of where my finances are today, lets me see how my assets are doing versus my liabilities, and from there I can set goals, I can plan, and I can anticipate future movements in my net worth. And when coupled with an income statement, that's very, very helpful. In the coming months, I'm going to actually make another YouTube video about the income statement download, which you can also find at mymoneymoves.ca. So if you've liked this video, stay tuned for that one. It will be coming up. Thanks for sticking around. If you've enjoyed this video, please give it a like, subscribe, and check out mymoneymoves.ca. There you'll find a ton of content on all things personal finance. Last but not least, please remember I am not a financial advisor and the opinions expressed are my own. If you have specific issues or questions, please do your own research and seek out a qualified professional who can help you reach your goals. Thank you again for watching, and I'll see you next time.